Tracking stock futures just slightly lower here for the Dow this morning, but the S&P 500 futures and the NASDAQ futures holding on to some slim gains here as investors look to recover from a Monday sell-off as well as a further year-end rally, perhaps here at play. Joining us now to discuss, we've got Matt Maley, Miller and Tabak & Co. Chief Market Strategist. Matt, great to have you here. All right, with the time that we have left in 2022, which has been a wild year to say the least, are we really expecting there to be kind of any strength to a year-end rally here?
Well, we certainly could have one. I mean, you always have that, fear of missing out type of thing, especially for the institutional players. This has been a really tough year. And if you're a portfolio manager, even if you've been keeping up with the market or even outperforming the market, it's been a tough year, right? You're outperforming, you're still down in most cases. And if the market rallies into the end of the year and finishes better and you're sitting on a lot of cash, you're going to look silly. So they will have to move with it. But my one concern is that everybody, even it seems like most of the real big bears out there are looking for the market to rally into the end of the year, and that the big problems are only going to happen next year. So, and you see with the VIX down below 20 yesterday, it did bounce slightly back above it. You see that at least on a short-term basis, there's a lot of complacency out there. Again, a lot of bears out there, intermediate term, but short-term, there's a lot of complacency. So I'm not so sure we're going to get that rally.
Matt, I enjoyed your note this morning. You really took a deep dive into banks and various bank stocks. Now, you had JP Morgan CEO Jamie Dimon out this morning warning again about another potential recession. How do those bank stocks do if we get a recession next year?
Yeah, I mean, these bank stocks are not expensive. In fact, many of them are very cheap. But a lot of people compare it. I remember at the beginning of the year, they said, hey, the market's very, very expensive, but don't worry because it's not like it was in 2000. And it's like, well, you don't have to be the most overexpensive, the most overvalued ever for the market to go down. And sure enough, it went down. Same with the bank stocks. People are saying, this is not 2008 all over again. Well, that's great. But that was kind of the worst time in the banks since the Great Depression. So it doesn't have to be that bad for the stocks to come down. I'm not looking for a big problem, but recessions are not good for banks. And of course, the yield curve, when you have short-term rates higher than long-term rates, their net interest margins are going to be pinched. And so again, that's and you look at the way the group is starting to roll over a little bit. I'm worried about the stock on a technical basis as well.
Matt, when you talk about expensive, one of the other reasons that you're not that optimistic about stocks overall is that you think they're still too expensive. If you look at the S&P 500, and you wrote some interesting observations about what we've seen in the past before we can exit a bear market, where the S&P 500 PE typically is.
Right. It's the one thing is that we have all these different indicators of where's the market bottom going to be, and has inflation peaked and stuff like that. Those are interesting comments. But the one thing that has an absolutely perfect record is valuations. Every single bear market. Now, not every bear market has had a recession since World War II, but every bear market, and especially every bear market that's also had a recession, has not bottomed until we got to at least a little bit below 15 times earnings. In other words, got cheap. We never stop at fairly valued. We always go to undervalued. And it's given how overbought and how overvalued we had at the beginning of this year, the chances are that we'll swing even further to the undervalued side before we bottom out. And let's face it, if earnings are going to come down, I mean, right now the market's trading at 18 times forward earnings and 20 times trailing earnings. If those earnings are going to have to, estimates are going to have to come down, which I think they are, that means we even have further to go. So the thing is, people are worried too much about, what's the economy going to go further down the road? Yes, we always want to concentrate on that. But if the stock market is well above what the economy is going to be 6 months down the road, it's got to fall, even if we don't hit a recessionary time frame.
Matt, while we've got you, I want to just briefly touch on crypto here because you've been tracking this FTX drama as much of the street has been as well. We had Shark Tank investor Kevin O'Leary on yesterday, who has echoed a lot of the sentiment of many of the people who are waiting for this washout to actually result in some of the more stable projects that the cryptocurrency space can hang its hat on going forward from here, plus regulation. Now, his position, of course, is in fact different because he was an investor in FTX. But from your perspective on the outside looking in, where do you believe kind of the shakeout nets out from here?
Yeah, I still think it has further to go. And one of the things, I mean, to be honest with you, boy, it's been unbelievable how well Bitcoin and Ethereum, a lot of these other ones have held up, given the news out of FTX. I mean, it was already below 20,000 when this took place. We haven't seen that big flush, which I thought we'd get at least more of it. But, this is very, very similar. I think the comparison a lot of people make to what happened to the internet stocks way back in, late 1990, 99, and then, of course, the early 2000s, where we had so many companies that should not have been in business. They went out of business. The baby was thrown out with the bathwater. So stock like Amazon actually went down 80% before it, of course, took off. It was the greatest buying opportunity of all time. And I think we'll see that with the best cryptocurrencies. But I do think there's got to be more further shakeouts. We have these kind of periods of stabilization or even rallies here and there. But I think it's going to be tough for Cryptoin to avoid dropping down towards the 10,000 level before it really turns around. We're still in a de-risking, de-leveraging process, and one maybe the biggest one where liquidity made the biggest play or the biggest asset class was the cryptocurrency market. So I think that hasn't fully, this process hasn't fully played out, and I think it has to drop further before we get that great buying opportunity, which we will. It'll be a small handful of names, but they'll do very well in the long term.
Miller Tabak's Matt Maley, always good to see you. Have a great rest of the week.
You too.